Now let's get more on BNN's top line, get shareholder reaction to RBC's first quarter results. Diana Avigdor, Head of Trading and Portfolio Manager at Barometer Capital Management, standing by at the TSX Broadcast Center. Good to see you, Diana.
Thank you very much.
So as a shareholder, what do you think about this quarter, or perhaps more importantly, what do you think about the quarters going forward?
Yeah, that's exactly the question as to why the stock is trading flat this morning. The numbers were fantastic, like the previous section that you had from Greg. But so I'm not going to go through the numbers. Everything was great. There was some feeling that maybe because of the new rules, the new mortgage rules, that some people would have applied for mortgages before the end of the year. But I want to move away a little bit from the numbers, which were all great, and just thematically talk about the fact that, one, the economy is expanding, and that's feeding into the loan growth and the commercial loan growth, generally speaking, from a macro perspective. The second thing I want to highlight is that trading and capital markets revenue has increased so much. It's a volatile number. It's a volatile line. However, with better stock markets, with better economies, better consumer, asset management and capital markets is going to continue to do well. And the third thing is, as a shareholder, we invested in Royal because of also its exposure to the U.S. market. And from Barometer's perspective, we have a couple of Canadian banks, but a lot of our exposure in the financials is in the U.S., just simply because there is a higher, longer highway to rally from, because they're cheaper, because there is a big consumer base, because of the growth of the economy. So Royal plays into that, and we've seen the U.S. segment through City National grow immensely. So overall, a fantastic quarter, and looking forward to the question that so many people are asking as to whether it can be weaker. We'll wait and see, perhaps, but generally speaking, just a generally good platform to be on.
It sounds too, Diana, like they know how to play those net interest margins as well, as the Bank of Canada raises rates, and the banks are happy to pass along those costs to us, the consumers, the borrowers. They're in no rush to actually give us more for our savings, so they seem to be playing that spread quite nicely and fattening that spread. Absolutely,
and we're so used to getting nothing for our investments or our cash at the bank, so everything is plowing into equities and equity-type products and income-type products. So they're not in any rush to raise. One of the line items that has contributed to the earnings was the fees and so forth. So they're making quite a lot of profit on all kinds of different segments. Certainly economy, inflation, rates going up. Everything is playing into a sector that has been very disciplined over the last decade, that has very clean balance sheets, and good discipline in our processes, into a growth type of segment. So overall, a great sector to be in.
Now, when people want to short Canada's banks, and a lot of them are obviously out of the United States, they don't have faith in our housing market. They don't think we've been as prudent as we are told that we have been, and that it's all going to blow up in our face. We've got a lot of regulation. We've got BC bringing in new rules as well. Is that the hurdle for 2018? I know we always talk about the hurdles in front of the banks. They seem to clear them all, but there's some people just don't believe that they can get over this housing market eventually.
And, you know, they try it at least once or twice every year to short the financials, the Canadian financials, for that reason, only to see that all types of, the housing market has not, a cooling of the housing market has not played into the bank's earnings yet in terms of mortgages. We're very disciplined as a society in terms of our payback and our insurances on the mortgages. It's a different system than what the Americans have seen in their system. We have much fewer banks than they're used to. They have hundreds, we have 6. So it's much more disciplined, and the rules and the coverages on the mortgages are much more disciplined. So we don't see the type of defaults that the Americans have seen. We've never seen those types of defaults that the U.S. market has seen, even on a base cases. You know, they try and then they end up buying it back. There has been, if you look at the charts of all the financials through the last volatility of the markets, they too have been hurt, and the financials have rallied into what we're starting to see some great numbers.
So now, out of the big 6 banks, we have CIBC, we have Royal already reporting. They've set the bar pretty high. They've delivered beats. They're boosting dividends. Do you expect the same for the rest of the group?
The street's expecting about 4 out of the 6 to raise dividends. So yeah, there's some expectations there. And frankly, the stocks are not really reflecting as much optimism. There has been a Sell Canada theme over the last month, even before the beginning of February, where we can point to the sell-off in the markets and the subsequent recovery, which has been pointed to as sort of mechanical because of volatility products or non-fundamental reasons. But there's been a Sell Canada theme from before, and global money tends to invest in our larger caps being financials, energy, some discretionary, consumer discretionary that we have now as we've diversified our stock market quite a lot over the last 5 years. So anytime you have that theme going in the market, you end up taking all these stocks a little lower on some non-fundamental themes. So, but we've seen some recovery there. We've yet to see whether there is new money being allocated to the sector. We get very affected by money flows in Canada.
All right, thanks for your time and your insight as always, Diana.
Thank you very much.
That was Diana Avigdor, Head of Trading and Portfolio Manager at Barometer Capital Management.